What if I told you that there was a way to recycle the same money over and over again in the stock market, just like real estate investors do with the BRRRR method, without selling your entire position or waiting years for market appreciation? Just steady cash flow plus capital recycling. Almost nobody is talking about this strategy, and the key is doing it with a margin of safety, so you're not blowing up while you do it. I'm Dr. Adam Corin, dentist by trade, investor by design. And here on The Dividend Dentist, my goal is to help you achieve true financial independence and time freedom with passive income. So let's get started. The BRRRR method is often a strategy that's used by real estate investors that involves recycling capital instead of a simple buy and hold strategy. The acronym stands for buy, rehab, rent, refinance, and repeat. But as we'll discuss in today's video, this isn't a property strategy. It's a capital recycling strategy. But the real question is, can you do this in the stock market? Well, I'm here to say that yes, you can. And it actually works incredibly well. I like to call it the capital recycling loop, where you buy income producing assets, collect income and benefit from price movement. You take partial profits and recycle that capital and repeat the process over and over again. But instead of refinancing, you're harvesting volatility and taking profits when they arise. So let's start with step one, buy. This is where we enter a position with a margin of safety. And in case you're unfamiliar, a margin of safety just means that you're looking for discounts in the market, such as pullbacks or mispricings in otherwise great companies or funds. A few examples may be a stock or a fund that's trading at or near its 52-week low, a position with a low relative strength index, meaning that it's oversold, or a position that has been subject to overreaction in the overall market and the media. In this step, you're being greedy when others are fearful, and stepping in when the odds are in your favor. Next, we move on to step two, rehab. But unlike real estate, you don't manually fix anything. The market does the rehab, and volatility creates opportunity. Instead of manually adding value like in real estate, the market simply corrects its mispricing, and therefore you get value creation and benefit from the upside. Then we have step number three, rent, where we turn our stock portfolio into a cash flow engine. As we've discussed in previous videos, there are many ways to generate income from the stock market that many people aren't aware of. This can include things like dividends, option premiums, and capital gains. You're simply finding ways to turn stocks into cash flowing rental units, where the income continues regardless of what the price does. Next up, we have step four, refinance, also known as profit taking or margin recycling in the stock market. In my opinion, this is the secret sauce for the entire strategy. Comparing to real estate, let's say a real estate investor buys an undervalued property, rehabs it, rents it out, and then pulls out their original equity to invest in another undervalued property. We're simply doing the same thing in the stock market, but instead of pulling our equity out tax-free with large and illiquid bank loans, we may partially sell a position after a quick run-up. You can also use margin strategically and very carefully without becoming over-leveraged. And in this step, you're harvesting gains and redeploying into new undervalued assets. This step may sound confusing at first, but let me give you an example to help clear things up. Let's say you buy a dividend-paying stock or fund for $50, but shortly after you buy it, it runs up in price to $60 within the span of a few days or weeks. Even though you're happy to simply hold the investment to collect regular dividends, you may sell a portion of the position and take partial profits, then reinvest those profits into another income-producing asset to where your original capital is still working to produce income. But instead of leaving your profits unrealized on paper, you're pulling out your equity, so to speak, and put those profits to work as well to produce even more income. This brings us to step five, repeat, where you recycle capital again and again, build multiple income streams, and remain diversified, liquid, and scalable. So as you can see, this is an income-based system, not a one-time trade. Now let's talk about why this method can often be faster and easier than real estate. First off, there's much lower overhead in the stock market. You're not dealing with tenants, repairs, or closing costs. Next up, you actually need less leverage to make this process work. Think 25 to 30% margin versus a 70 to 80% mortgage. Next up, we have speed, where you can do deals in days in the stock market, not weeks or months as is common in real estate. And lastly, we have liquidity, where you can exit a position and or deleverage at any time. In real estate, this often isn't possible. So in closing, real estate investors figured out a long time ago that cash flow beats speculation. And hopefully after today's video, stock market investors are beginning to catch on as well and can apply the same strategies and principles in the stock market. This strategy often gets ignored for a variety of reasons. For one, it doesn't fit Wall Street's model that revolves around price movement and speculation. At the same time, it doesn't fit a day trading model, nor a traditional buy and hold real estate model or index fund model. It lives in the middle of all of these strategies, which is why nobody teaches it. But just like with any investment decision or strategy, there are risks that we need to be aware of. Prices can drop, and income can change or be cut. And as such, this strategy requires careful oversight and discipline. And just like anything on this channel, this is a system, not a shortcut. So in summary, the BRRRR method in real estate builds wealth through size, but the stock market BRRRR method builds wealth through speed and capital velocity. You're not waiting for wealth, you're engineering it. If you want to learn more about this strategy and other strategies for building passive income outside of the workplace, I'd highly encourage you to check out my latest book, The Passive Practice Path, available in print on Amazon. If you're a high-income professional that wants to build passive income outside of the workplace, I highly recommend that you check it out. And lastly, please remember to hit the like button and subscribe to the channel. I'd really appreciate it. And drop a comment below and let me know your thoughts on this strategy and what you'd like to hear more about in future videos. Thanks for watching, and I'll see you in the next video.